Hello, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my macro update for the coming week. The past week has been quite significant in trends, particularly more on the geopolitical and political side. On the geopolitical side, we have seen new tensions arising between US and China. On Hong Kong, the possibility is that US can introduce new sanctions against China, which is bad news for the markets. On the political side, we have seen significant rise in political instability in the US. We have seen mass demonstrations driven by these racial tensions over the past few days, which is also a factor which puts more pressure on the dollar. We have seen a very significant weakening of US currency against other currencies. That was supportive for the ruble as well as supportive for the oil prices. Basically, towards the end of past week and start of this week, we have seen ruble and the oil coming up to the levels that we expected both to trade at the end of this year. Oil close to $40 per barrel if we talk Brent, and ruble below 70 rubles to the dollar. However, we don't think that this is a trend that's going to sustain for a long period of time. We believe that within a week or 2 weeks, US dollar has a chance to regain its strength. That would bring ruble back to levels below above 70 rubles to the dollar, and oil close to about $35 to the per barrel. However, last week we have upgraded or renewed our macro forecast for Russia. Now we expect Russian GDP to fall slightly more than previously at around 3.8% this year, and to recover by about 3% plus next year. We expect ruble to trade on average about 70.5 rubles to the dollar and 69.5 rubles to the dollar by the year end. We expect inflation to come down to 4.2% by the year end, after growing to about 4.5% in the mid-year. And we expect the central bank to keep easing its monetary policy by roughly 100 bips down from the current level, if we talk key rate, to about 4.5% key rate by the year end. In dynamic of Russia, we actually expect consumer segment and investments to be under larger pressure, while the real economy, including industry, to have to show less decline than the consumer. Looking into the coming week, basically we will be watching closely geopolitical developments, particularly the US-China relations. Thus far, Asian markets are reacting quite positively to the latest data that shows that the recovery in Asia is ongoing, which is a positive news for the markets, not only now, but it has been a big driver for the markets over the past couple of weeks as well. On the negative side, geopolitics is one factor, and another, of course, the political developments in the US. This is something that's concerning investments, and something that could have an impact on the dynamic of Russian market and the ruble. Thank you.